Today, we take you inside the $150 million acquisition of a 21-year-old Kanata technology company. The founder and CEO tells us why its status as a publicly traded microcap might have contributed to the transaction. And we find out what comes next for the company and its CEO. Keep watching for more in this episode of Techopia Live. Hello, I'm Michael Curran from the Ottawa Business Journal. Welcome to Techopia Live. This is a regular podcast from OBJ that features interviews with executives from next-generation technology companies as well as leaders from Ottawa's ecosystem. Our mission is to share knowledge and create a deeper level of understanding on what's happening in the local tech system. We want to explore issues that are common to local tech firms that might be relevant for today's discussion, all with a goal of leveling up Ottawa's tech sector. Thank you for tuning in. And if you're enjoying the podcast, I encourage you to share it with a friend, someone that else might be interested in the technology community. All right, let's jump right into this show. 2.5 years ago, I talked with today's guest when they hit a big milestone, their 20th anniversary, and its founder and CEO was very optimistic. They were acquiring customers and experiencing growth. There were a few challenges, and one of them might come up in today's discussion. One of the underlying challenges was that the company was publicly traded on the TSX Venture Exchange, where there is very little trading volume. Well, things have changed. In May 2024, the company was acquired by a private equity firm for $150 million Canadian. And today's episode will take you inside the acquisition and figure out what comes next for our guest. Let's welcome him back now. He is the one and only Colombian tech titan from Ottawa, the founder and CEO of TrueContext's. Here's Alvaro Pombo. Hey, Alvaro.
Hey, Mike. Good to see you.
We got to tell people you're sitting in the red room. Tell people where you are, I guess.
Okay, so I was in Germany yesterday at a trade show, and on my way back to Ottawa, I had to overnight in Portugal. So I go online into one of those hotel things that I buy, and it's blind, literally blind. So I've been put in my hotel room. It's a red hotel room. So it's funny.
There's a Seinfeld episode with Kenny Rogers Chicken, I think it is, where they put this big neon light outside someone's room, and they keep going into this red room. So it reminds me like that. So I hope you're getting some sleep in all that ensconced in that redness. But anyway, Alvaro, listen, I'm really looking forward to this discussion. I think it's going to be a really interesting one, as it always is with you. We're going to get to the news, but just introduce the company to start with, TrueContext.
So, Michael, we're an overnight success, 21 years in the making.
Yeah.
That's the best way to introduce it. Look, it is, we've been early to a market that is a fascinating market. We help technicians in the field performing workflows as they fix, repair, health and safety things of complex equipment. Okay, so we help complexity, simplifying it, and enable those guys go back home safely, on time, and be more effective, more productive.
Yeah, it's I was re-listening to the last time we spoke on the podcast, and I really picked up on that message. Like, it was a technology ahead of its time to some degree. Like, you thought Palm Pilot was going to change it, and then all this BlackBerry was going to change it, and they never really changed the world. And then iOS comes along, and you guys develop these low-code apps, and suddenly you develop this really significant company.
Yeah, it's been, I used to work for Exxon many months ago. I'm a computer engineer, math kind of guy, geek. And when I moved to Canada, I was working with Newbridge and I became CIO. And after the company was sold to Alcatel, I decided that I wanted to start a company with a problem that I saw at Exxon, implementing field automation, that I thought it was going to be very important and very relevant problem. The problem was a little bit further ahead of its time, but the problem still exists, and we're doing very well solving that problem, helping those technicians doing a multitude of workflows in the field.
Yeah, it's excellent. And we've arrived at a big milestone. I mean, in the course of your
Yes.
career, I mean, it was probably like the sale of Alcatel. You worked 21 years. You create ProntoForms, now known as TrueContext. And then this happened. So tell us the big news.
The big news is terrific. I mean, we found a great partner in Battery Ventures. We went through a very, thorough process as a publicly traded company. It's not that you pick someone out of the blue and you say, hey, these guys are buying us for whatever price. I mean, there's a very thorough process conducted. And as we went to do it, we turned out to be, as I said, better looking than what we thought we were. So it was, we had a lot of people interested in the company, and it's all public disclosed information. We had 6 of them bidding for the company, and Battery won the bid. And it's a great partner, and we're both very excited and moving very fast. These guys move at an incredible speed, and we're going at it.
We're going to get more into the deal, but let's dig into Battery Ventures a little bit. They're located, I think, in the U.S., and Chelsea Stoner is a significant principal there. But tell us a little bit about what Battery Ventures is right now and how they might help.
Many people in the Ottawa region might remember them because they were very active in 2000, 1990 something in telecom in Ottawa. So they invested a lot. That's why the name kept on ringing for me. So when I got a call from them, I definitely took it. It's I don't know which fund it is, but right now it's like 18 or 17 fund, $4 billion fund. And they have many companies. They invest purely in software, SaaS. They have a hypothesis around field services, and they had an investment, and they have others right now, 1 or 2 more, and they like what we do. They were very knowledgeable about what we do, and we definitely like each other. But as I said, look, in a public transaction, you have to follow the rules. We followed the rules, and we ended up with a good one, both things simultaneously, which is great.
Yeah, and Chelsea Stoner is the principal, and I think you said we should give her a little bit of profile in the Ottawa area in weeks and months to come. But I presume that you feel that Chelsea and the entire Battery team can help propel the further growth in for TrueContext.
Yeah, definitely, Mike. I mean, she's terrific. She's the group that we're working with is out of the Valley, out of San Francisco office. She's one of the main general partners there, and I don't know how many there are, but like 10 or 9 or something like that. And she leads a team, and that team, and she's the lead. I mean, she's been very, very, very close. I work with her many days of the week. Terrific leader. They know what they're doing, and they already have given us some very good input and some very good coaching in how to accelerate. They're not operators, okay? They're very clear with that. They're investors, and the company has been selected as a platform to invest on the platform. So we're not being amalgamated with anybody or anything like that. It's a platform play, and we're the platform. So we're very excited about that.
Okay. In a few minutes, we'll wait for them to talk about maybe why you thought this was the best route. But let's just talk about the how the deal came together, because I'm sure there's other tech CEOs listening or watching this and wondering, like, what does that type of process look like? And obviously, it was a little bit different from you because you're a publicly traded company. But just in terms, high level, Alvaro, of how long did it take? What did the process look like? How do you come to a final bid to being accepted? Walk us through that for a minute.
Yeah, look, everything started with, as a publicly traded company, the public market gave us, I mean, I wouldn't be alive if it wouldn't be for going public in 2009 as we did, okay? Everybody remembers 2008, what happened. And there weren't many other mechanisms to raise money at that time in the Canadian tech scene. So we went public. The public thing works when you have, at the same time, the public story changed. So at the beginning, it worked. Shareholders were aligned. We had a very little revenue, and people bought shares and they held them. Okay, so it was never a widely held stock whatsoever. It didn't have any volume, any float, and everybody liked it, loved it, and kept the shares. So what happens is that your price that never moves. So you start creating this not asymptotic situation where the price of the share doesn't grow, the value of the company continues to grow. And there was a point where after a few years, doing that, some shareholders say, hey, you know what, I want to sell. And when you want to sell, it's very hard to create liquidity for them. So, and then you go and try to sell those shares, and people say, okay, yeah, I'll give you the money at the market price. And the market price being the stock price. So it created a situation of misalignment of shareholders that don't have to go into a lot of the details, but very hard to manage.
Okay, Alvaro, that's really interesting. In terms of the length of time that it took and sort of the high level process, tell me a little bit more about that.
Yeah, so the process started like about 2 years ago. Every tech CEO receives inbound opportunities all the time from private equities as well as some strategics. And I started going to the board. I said, look, we should do this at some point, okay? And we in October decided to do it. At that point, the board appoints a committee. That's the part that not everybody has to go through. When we appointed the committee, we selected some bankers. We did a selection of bankers. We selected Canaccord, and they did a terrific job. So now working with them, we took a baseline of inbound that has been coming. They augmented it, and we went through a very thorough process. At some point, we talked to 20-something different potential acquirers. And then it comes down to a very narrow part of it where, the buyers are making big investments in due diligences and things like that. And we went through that process and then selected Battery. At that point, it goes into a quiet period where anybody can outbid Battery. Okay, anybody in the public can do it. And that's why our conversation, when we did the announcement in March, we had to wait until May for regulatory approval and for that quiet period to allow other buyers to potentially, bid for the company. And that's it. That concluded last week, and we're on the other side.
Pop the champagne. And just to be clear, so TrueContext was a publicly traded company. The shares have now been delisted, and
Yes.
You're owned by a Battery.
Correct. That's the case.
Okay. So listen, I want to dig more into a lot of the issues that might have convinced you to pursue this route. But before we do that, Alvaro, I want to pause for a second to recognize the sponsor of this episode. Here is Perley Robertson, Hill and McDougall. Tech companies move at the speed of light, and they need a law firm that moves just as fast. Perley Robertson, Hill and McDougall solves tech companies' most challenging legal matters. As Ottawa's largest independent full-service law firm, Perley Robertson, Hill and McDougall has provided specialized legal services for over half a century. Perley Robertson, Hill and McDougall advises tech companies in all legal matters important to fast-moving companies. That includes financing strategies, venture capital raises, private placements, public offerings, M&A, IP, shareholder agreements, stock options, and more. To learn more about Perley Robertson, Hill and McDougall, please visit perlaw.ca. All right, we're back thanks to our friends at Perley, and we're talking, of course, with Alvaro Pombo, the CEO of TrueContext, and we're going to get into this really fascinating issue and the process that you've just been through. I'll take you back a few minutes. You said something really interesting to me, Alvaro, that that you went public. The company was then called ProntoForms, of course, in 2009, and of course that came right after kind of the financial crisis. So you said something a couple of minutes ago that was interesting. You don't regret going public. It was necessary at that time. However, your status as a small cap, micro cap did become a little bit of an issue. Can you explore that with us a little bit more?
Look, I think at the end of the day, public markets, micro cap in the world, but anyway, I'm not an expert in the world. I live this Canada. So micro cap in Canada of tech has been disappearing. And it disappears for good reasons. Again, that's a more macroeconomic question, a more finance question, but for good reasons, to my belief. And this emergence of these other mechanisms to finance these companies, like private equity guys, I mean, they get a lot of that money that used to go into some of these different instruments, if you want to put it like that. So I think it has been a natural evolution. I mean, you can blame that only growing 20% year over year is not enough to become a $1 billion company. At that point, people pay attention. Okay, so it's not that the public markets are dead for tech. I mean, that'll be silly to say. It is that small micro caps publicly right now at this point in time, very difficult.
And I think there's a demonstration of what you just said, because if I read the press release correct, I believe the 150 million that you received for TrueContext was more than the capitalization on the public markets for the company. Is that correct?
Yeah, I mean, when we started this process, I don't know, it was like 50 cents a share, probably not that long ago, 30, 40 cents a share. And it's 107.
Wow.
And I mean, look, those are 4 and a bit times revenue. And that's the issue. I mean, the issue is that you get undervalued. And then, I mean, look, this is a deal that made everybody happy. And I'll go one by one. The shareholders, who are the people that I work for, okay, they deserve that liquidity. I mean, we built that value. They were there. They committed to the company for many, many years, okay? And that's good. I mean, it was time. Some of them, for multiple reasons, want to get their money out. Nothing wrong. Nobody was tired with the company. Is that 9 years for some of them of investment? It's a good timeline. So then they got a very good value out, okay? Then the next group of people that I work for is my employees. I mean, it was very good for them, okay, as well. And everybody did well on it. And then our customers, I think our customers at the end of the day, which is my third most important constituent in the company, the company needs to accelerate its growth in innovation in many things. And it's not lack of brain of ideas or anything. It's lack of resources sometimes that limit your ability to go faster. And so I think everybody made a very good, this is a win-win, and a win-win for Battery as well, which they believe in the space. They want to build a platform, and they found a great mechanism, and I believe a great team and a company and a region that they can invest on. So I think everybody's happy. I haven't heard one upset.
Yeah, it's interesting. All companies, as you said, are built on those pillars. And in this case, the resolution or the evolution, maybe I'll say, of the company led to a situation that supported all of those pillars and brought everyone really kind of more value. I'll ask you, if you don't mind, a personal question. What comes next for Alvaro? You've got this incredible history in Ottawa. I hope we keep you.
No, I mean, absolutely. I don't want to say the word no for a second. No, absolutely. I am. Look, they're investing in me, in the team, and we're staying in exactly the same place, same office. We're accelerating. We're looking now as a platform. We're going to be acquiring some assets, some companies, and we're going to continue to grow and continue to evolve the company. I don't have any earnout. I don't have golden handcuffs that I have to go run away. None of that stuff. Okay, so we're here, committed to continue the growth of the company. I'm more excited now than ever before. It's just another chapter on the thing. This is phase 3. I can clearly dispel the phases, and this is the third phase, and an exciting one in front of us.
Neat. We'll start wrapping up here, Alvaro, but I wanted to talk about the future. You said something kind of a minute ago that caught my attention, that you realize, like all tech companies, that you need to continue investing in innovation, and there were limited resources before the acquisition. Potentially, there's more financial resources and connections and know-how, for example, to continue accelerating the growth. Is there something now that was on your, let's say, your checklist, as we really need to evolve using AI, for example? And now that we've got these great partners, we can accelerate that. What is the kind of the big thing that we might see from TrueContext in the future because of the acquisition?
More focus, okay? And Michael, the other part of being a CEO of a public company, it takes a lot of time handling shareholders and doing other things, and more focus. I'm just squarely focused on where the problem of the market is, and just accelerating that And well, we build up the momentum. Okay, it's not that you will never end up being public again, but it will be a very different size of team, company, different levels of profitability, et cetera, et cetera. And the metrics, I mean, it's the metrics of the company were very good, very good. That's why the deal happened. So it's just more of the same, faster.
Your point is well taken, and not everyone knows this, but one of the challenges of being a publicly traded company are the regulations and the processes that you're continually caught in. So a lot of your mental energy, I think, is what I'm hearing from you, Alvaro, is caught in those processes, as opposed to, for example, leading your sales team, talking to customers, so on and so forth.
Look, I mean, it's the cost of doing it is not that big. I mean, it's a lean market. I mean, in terms of the TSX, etc. It's just that your brain is in multiple places. There is nothing wrong in having your brain on your shareholders, but when you have one, okay, and you talk to them every time, that alignment happens constantly. Every Tuesday at 12:30, I'm aligned. Okay, so that's great.
Okay. No one phone Alvaro Tuesday at 12:30. That's what I just understood. Well, that's great, Alvaro. It's great that you've come to this milestone. Seems like it's going to be success, as you said, across those three pillars. We're going to wrap up now, but as is our custom, we're going to have our Building a Better Working World segment brought to you by EY.
Michael, we're making a better world by helping those technicians in the field. It's a part of the workforce that not many people know about how important they are. Those are the guys we're making, and they're working much better because of what we do every day of our lives.
Thank you, Alvaro. That's interesting. And I remember that from our last podcast. You were saying it's the technology that TrueContext has enabled is for the workers in the field. It's not necessarily the shirt and tie guys around the boardroom table. So I like that. But by the way, before we leave, I just want to thank you, Alvaro, because you've been very transparent and shared kind of the pros and cons of being a small cap, micro cap company. And I think it's very useful for us in the local technology sector to share these stories and to get into some of the mechanics of investment and financial mechanisms. So thank you, Alvaro, very much for being so transparent and sharing this exciting time period.
Michael, I always say the same to you. We are the ones that we should thank you, okay, for being such an incredible champion of all of us and enabling that communication. If this can be useful for anybody, let me know. Happy to help one-on-one and happy to continue to move the needle for the entire region.
That's awesome. We'll get you out of that red room soon. We'll put you on a plane and we'll bring you back to Ottawa.
This is going to be memorable, Michael.
Thanks, Alvaro. We appreciate all your support and good luck into the future with your new partners.
Thank you, Michael.
All right. Big thank you to Alvaro. A company we'll definitely keep our eye on. They're entering this kind of exciting new chapter. Before we go, let's take a look at some of the other great companies that champion this Techopia project. Techopia is brought to you by many great sponsors, such as EY, Building a Better Working World; Number Crunch, offering virtual CFO services for SaaS companies; Pearly Robertson Hill and McDougall, a leader in business and technology sector law; TD Bank, specialized programs for technology companies; the University of Ottawa Faculty of Engineering, creating the next generation of technical talent. Techopia is not only a podcast. We post new articles daily at obj.ca/Techopia. And if you're on YouTube, please subscribe and click the bell icon. All right, very good for Alvaro to once again share in such a transparent fashion all the recent comings and goings with TrueContext. Again, we wish him good luck. Listen, we got some news of our own. Once a year, and only once a year, we put out this annual technology report called Techopia EY Insights. And just a few weeks ago, we had a great launch party. We were in downtown Ottawa at Queen Street Fair with a couple hundred, probably about 250 local tech leaders. We had a great launch party. People seem very happy with this magazine. It is our opportunity. OBJ through Techopia is often in the weeds every day, reporting on the transactions and the comings and goings of tech companies. The magazine's an opportunity for us really to zoom out on the tech sector and look at it from a higher kind of level. So if you take a look at the magazine, you'll see all sorts of interesting features on serial entrepreneurs and why they've stayed in Ottawa, tech CEOs that were started in Ottawa and have left, and their perspective on Ottawa. We've got several pages on Ottawa's technology ecosystem with all the little different players. There's so many of them. There's dozens and dozens of little organizations and major organizations that exist to help the local tech sector. And at the back of the magazine, I think this is really cool. We take the local tech sector, we break it down into 13 subsectors, and we identify kind of the flagship company and the up-and-comers. So it's a very cool magazine. As you can see on screen, you can go to Techopia, EYinsights.ca. That's all the time we have for today. I want to thank you for watching and or listening. We hope Techopia is keeping you connected and informed. Let's keep building Ottawa's technology utopia. That's Techopia. See you soon. Bye-bye.